Now, I directly want to speak to the property investors because the tax changes in this year's budget are consequential and they come with a hard deadline. Negative gearing is one of the most spoken out loud topic in Australia. From 1 July 2027, negative gearing will be strictly limited to new builds only. Also, if you happen to acquire a new rental property on or before 7:30 p.m. Australian Eastern Standard Time on 12th of May, you will no longer be able to claim or offset the rental tax loss against your salary or wage income. In other words, it means that in the future year, whenever you earn rental income, you can claim these losses against them, but no longer against any other income for that matter. But here is the important part, which I want you to know. The existing properties that you already hold are fully protected. So all these changes are no longer retrospective, or I would say are not retrospective at all. Moving forward to capital gains tax. From 1 July 2027, 50% capital gains discount will be replaced with the indexation cost based method, which will be around 30% of the tax on the net capital gains. Indexation means that you will be only be charging gains on the amount that exceeds the real inflation. For new residential bills, there is an option to choose either the discount method or the indexation method, making sure whichever works best for your tax situation. Moving forward with the discretionary trusts. From 1 July 2028, a minimum of 30% tax will be levied on distribution from trust income. So if an accountant is in the habit of pushing forward that trust income distribution to a beneficiary who is in the low income tax bracket, then this habit needs a serious review. From 1 July 2027 onwards, the government has given a 3 years rollover relief wherein the accountant can sit with the client and do a serious review of the tax distribution strategy to get the best possible tax outcome. The message here is very clear. If you have an existing rental property, then there is no need to worry as you're protected. But you need to review your structure now. If you're a trust holding on to an existing property, then go check with your accountant before 2027 kicks in. Last but definitely not the least, the type of property you buy, a new build or an existing one, will have a very different tax outcome. So make sure you do the groundwork before going ahead with the purchase. For non-resident Indians and businesses operating across the India-Australia corridor, I want to draw your attention to 3 important points that are laid down in this budget for your reference. Firstly, the foreign investments approvals by both the government is much more faster and simpler. So if an Indian business wants to navigate the Australian jurisdiction with ease, now is the right time to go ahead and take the benefit because the process and the overall timeline is quite navigable. Second, the fuel and security measures in this budget are quite vivid. Australian government is signaling at a long-term investment partnership with India, especially for Indians migrating to Australia and increasing in population size. The Economic Cooperation and Trade Agreement, which happens to be the free trade agreement between Australia and India, finished 3 years in operation in December 2025, signaling at industries such as critical minerals, energy, and infrastructure. The players in these industries can take the benefit of the current policy changes and make the most out of it. Third, and this one is more specific for non-resident Indians who have a strong Australian financial interest. The discretionary trust changes, the capital gains tax updates, and the negative gearing amendments do not exist in isolation for you. They work in interaction with the Double Taxation Avoidance Agreement, the Foreign Exchange Management Act, and the Reserve Bank of India rules. So make sure you have the right advisor on board who helps you with everything with scratch and understand both the jurisdiction with ease. So if you happen to be a non-resident Indian or a business with a strong financial interest in Australia, then now is the right time to get your tax structures in place. And no longer just wait for 2027 when these changes are made live. So there it is, the Australian Federal Budget 26-27 from the bird's eye view. Tax cuts for 13 million workers, permanent changes for the small business investors, major structural improvements for property owners, and major implications as well as opportunities for non-resident Indians and businesses. So, if you need any advice regarding the budget, then feel free to comment, like, and share, and book a consultation call with us. We would be happy to evaluate your independent situation and help to break down the budget as per your needs.